Hey, it's Rav. Welcome to Everyday Investor, the hottest investment show in the world. That's right. I said it. I don't care who knows it. Remember, the purpose of this show is to help us have time to be able to enjoy with family, friends, engage in a purpose that's greater than ourselves. The challenge often is that we take our precious time, we work a lot in order to get a paycheck so that we can provide. Let me say that again. We take our time, we go to work, we get a paycheck so that we can eat. But imagine a world where money could make you money so you could work a little less if you wanted to, and you had time for the things that are most important to you. That is the essence of Everyday Investor. Remember, whenever you're faced with any investment opportunity, you always want to ask 4 questions to start. Number 1, where do I get, or actually, what is the ROI? What's the return on the investment? Number 2, when do I get that return? 3, what is minimum amount needed? And 4, what is the risk? Super excited about today's show. We're going to be talking to my good friend. Wait for it. We'll be right back. Coming up, we're talking to Dave Dubeau as he teaches us how to attract money for our deals.
A lot of people rush out and start raising capital from everybody and anybody, right? Anybody with a pulse and a checkbook, they think that'll be a good investor. That could be a very, very bad mistake.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back. Before we talk to Dave and learn how we can attract money for our deals, let's go to our stocks expert, Omar Khan. Omar?
Thanks, Rav. Omar Khan here, guys, with Theta Trading Weekly Market Update. Markets are looking pretty good this week. S&P was up 1.1%. TSX was up 1.3%. That brings them to 7 and 8% for the year. So they're doing pretty well for the year. However, if you're investing in mostly US-based stocks, you notice the US dollar is weakening, meaning you're losing some money on the currency. So if you notice, some of your investments might be doing that. But the markets generally have shrugged off the 10-year Treasury yield going up and the worry of inflation. And now the market's looking forward to corporate earnings. In the end of the day, corporate earnings are what drives the market. So if companies are making a lot of money, simply put, their stock price will go up over a period of time. It's just that simple. And that's what we think is going to happen. So corporate earnings should come in pretty strong coming in here in April. And that hopefully should propel the markets forward. But let's see what happens. Anyways, back to you, Rav, and we'll see you guys next week. Take care.
Thanks, Omar. Always great to learn from you. Dave Dubeau, thanks for being on the Everyday Investor TV show.
Thank you, brother. Good to be here. Thanks for having me, Rav.
Yes, no, it's my pleasure. I mean, you know, when our producers were talking to you, you know, they were saying, yeah, but Rav, Dave, this is not a particular investment strategy. And I said, okay, then what are we going to talk about? They said, well, Dave's going to teach us how to attract money. And I said, hey, that's even better than an investment strategy. If you could teach me how I can attract, money for the deals that I want to do, then that is fantastic. Dave, how did that, I mean, this is your niche. You teach this, you train people, you coach people. How did that come to be?
Well, it came to be because I sucked at it initially, Rob. That's how it came to be. When I first did my first kick of the can at raising money, I failed miserably because I followed all of the old school advice. You know, people have been fed this whole BS about just find a good deal and the money will find you. And I say, no, that's not the case. So I remember very, very vividly, I had self-financed my first couple of deals. I was doing stuff with single family homes at that time. And I ran out of cash, ran out of credit. And of course, that's when the perfect deal lands on your lap. So, you know, I said, okay, well, I got to do something to raise some money here. So I'd always heard, hey, if you need to raise money, pick up the phone and start dialing for dollars. You ever heard that one before? Cold calling. Yeah. So I tried that, Rav. I'd like to say, you know, I cranked through hundreds of calls. I didn't. I probably cranked through about 7 or 8 calls, got rejected big time. Got my little fragile feelings hurt and said, screw that. I don't want to do those calls anymore. So then I'd also heard, go out there and turn every conversation into a real estate conversation, network, schmooze. That doesn't really come naturally to me, believe it or not, but I tried it. Local BNI, Chamber of Commerce, Toastmasters, wherever they let me in, I went in there with my business cards and all this stuff, schmooze, 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 raised zero capital. So by this time, I'm running out of time and getting desperate. Got a little bit of extension on the financing clause for that deal. And then I put together, I said, hey, if enough people see this deal, it's so good, it's going to sell itself. Yeah, right. But anyhow, I didn't know that at the time. So I put together a PDF, emailed that out to everybody I knew, and started getting responses. But they're saying, Dave, haven't heard from you in 5 years, 10 years. One guy hadn't heard from me in 18 years. I said, now you're hitting me up for money. Take a hike. All right. So Rob, I think you can see the end of this sad story is everything went to crap. I couldn't close on the deal. I live in a relatively small town, small city. So I got some major egg on my face. I ticked off the seller, ticked off my client, ticked off the realtor, the mortgage broker, everybody. I said, this sucks. There's got to be a better way to raise money. So then I just decided, hey, why don't I back up? If there's something I'm pretty good at, it's marketing. Why don't I apply intelligent marketing to raising capital? So that's what I did. Long story short, since then, raised hundreds of thousands of dollars for the kind of deals I was doing there, got into multifamily apartment buildings, raised millions of dollars for my own deals there. And over the last 7 or 8 years, I've cumulatively helped my clients and students raise hundreds and hundreds and hundreds of millions of dollars for their deals, following what I call my money partner formula, that thing in the background there.
Money partner formula. No, I love it. Because there's a lot of people that watch TV. They watch, the greatest TV show that exists, Everyday Investor, and they see a lot of people come on and they get excited and they say, I want to do this. I've got time on my hands. I want to buy that property down the street. I want to put in a basement apartment. I want to turn that single into a double or that duplex into a triplex, but I don't have the money. How can I do that? I have the brains, I have the knowledge, I have the hands, the skills, but I just don't have the money. And
Yeah.
You're right. I mean, the people, I've heard all sorts of things. You go to these networking groups and you join those and you wake up at 5, 6 in the morning and have breakfast with a bunch of guys. And then I've heard that, so and Dave, please, as you teach me, you're teaching the viewers.
Yeah.
So I please correct me in my thinking. And so I don't know how you get money for the first deal or 2 or 3, but once you've had about 2 or 3 deals, what I've taught people, and please help me how I can teach them better, or even what I'm about to say to you is not the right way.
Sure.
I don't know how to teach them how to get 1 or 2 or 3 deals. No idea. But once they've got 3 deals, I tell them to go get a website. It's cost you $5 to go get investwithrav.com. Okay. So I get investwithrav.com, and now I put those 3 deals on my website. I show the ROI, and then I say, this has to all be about helping people. It's got to be a win-win. It can't be just give me your money so that Rav can succeed. That's kind of where I've gotten in terms of where I just teach people over a coffee, not for the reason of teaching, because I have no business doing that. That's people like you do it. But when somebody asks me, I say, hey, I don't know how to do the first 1 or 2 deals, but after that, this is what I would do. What do you say to that?
Well, I think that's really, really good advice there, Rob. My take on it's slightly different. Again, one of the challenges is a lot of people rush out and start raising capital from everybody and anybody, right? Anybody with a pulse and a checkbook, they think that'll be a good investor. That could be a very, very bad mistake. And here's why. Again, caveat, I'm not a lawyer, not a securities guy, not an accountant, but this is my understanding. That you and I, as mom and pop investors, we're not allowed legally to raise capital from the general public without either having a license to do so stockbroker, mortgage broker, financial planner, that sort of thing, or having an offering memorandum, which is a big rigmarole, pain in the butt, and way beyond us doing a little duplex conversion type deal, right? So where does that leave us? So, if you're in Canada, the exemptions are that we can work with accredited investors or we can work with friends and family, which is what you were talking about. And accredited investors, these are high net worth, high income type individuals. If you know a bunch of them, great, go for it. If you don't, it's kind of a bit of a challenge because, especially when you're just getting started, everybody's trying to get their money and their attention. So here's my take on things, Rob. Don't want to start with a public website just yet, because again, there could be a challenge getting in trouble with the Securities Commission. We don't want that to happen. That's no fun. So what I suggest people do is let's focus on that group you talked about first, that group of friends and family. So we create what we call a target group of prospective investors. Ideally, you get 150 to 200 people in that group, and then we start the ball rolling. So step number one of this 5-step process is create that target group and reconnect with them on a personal level first before we start talking real estate. So, if you recall my sad story there, Rob, I kind of rushed out like a bull at a china shop and said, "Hey, it's Dave. I got this great deal. Have you got any money?" And it backfired big time on me. Right? So what we want to do first is have a little in-between step, which I call, reconnection. That's what we call a warm-up campaign. So you get those 150, 200 people. Where do you find them? Get them all from your cell phone, your email addresses, your LinkedIn, what have you. Sift, sort, and filter. Just really focus on the people you actually know. That's step number one. And then let's send them out a few little emails, right? First email, just a nice little warm-up type thing. "Hey, it's Dave. Chances are we haven't connected for a while. Here's what I've been up to for the last 3, 4, 5 years," right? What I'm up to, what the family's up to, the kids are up to, just kind of a nice little warm and fuzzy.
Is this step number 2? Send the emails, or is that part of one? It's all part of number 1. Okay.
Yeah, reconnect, right? So we reconnect with them. At the end of that little message, say, "Hey, that's what I've been up to. How about you? Please hit reply and let's catch up." Okay. Then the second message goes out, same idea, but we do it on a video format. A little bit different, same idea, but a video. And again, at the end of it, say, "Hey, that's what I've been up to. How about you? Please hit reply. Let's catch up." And then the third message is really important, Rob, because this gives people the heads up that we're going to start talking business. We're going to start talking real estate. So that third message goes out. Again, I suggest a video. "Hey, it's Dave. It's been really good reconnecting with you over the last week or so. I want to let you know that moving ahead, I plan on doing a much better job of staying in touch and letting you know what I'm up to with real estate. Real estate's something I'm very passionate about. In fact, I think a good real estate deal is the best way for everyday folks like you and like me to make an above average return on our money, backed by a solid asset, real property. And who knows, maybe sometime in the future, you might even want to partner with me on a deal and share in the profits." Okay.
Okay. So I love this. I love this, Dave. So again, Rav wants to do this. I realize that there's great returns in real estate. I want to be prudent. I want to be wise. I want to be shrewd. But I've got no money, but I've got the expert. Well, I don't even have the expertise yet. So,
wow. Yeah. Then it's tough, to be perfectly frank with you, Ralph. Like if you haven't done a deal and you're trying to raise capital from the get-go, it's possible, but it's a hassle. And you might have to be a lot more generous with your profit split on the first deal or two. So okay. I don't want to blow smoke up anybody's skirt here, right?
No. I appreciate it. I appreciate. I don't want you blowing smoke up my skirt either. That's why I think we're cut off about here. But listen, no, I appreciate that, Dave. So because I think there's 2 ways to do it. I think number 1, hopefully you've got the capital to do one deal, and then we go from there. And again, people see the returns and they're blown away because everyone, thinks you're just supposed to make 3, 4, 5%. Or Dave, what about, these workshops, seminars, coaching? Like, what happens if I went to real estate investing school for a year and then said, "Hey, I'm about to do my first deal, give a lot more of the profits away." It doesn't necessarily have to be a traditional 50-50. I could give away 70% and maybe keep 30. What are your thoughts? So Rav is, a cousin of Dave's, and I say this to you. I say, "Dave, I don't have expertise. I don't have money. But what do you think I've got a few $1,000. What do you think if I spend that on training?" What are your thoughts on that prior to my first deal?
Yeah, for sure. You got to have the training before. Think about it. Rob, I don't know about your neck of the woods, but even to get into a little deal, you're looking at, down payment of at least $100,000, and then if you're looking at renos and all that kind of stuff, it's getting up there. So nobody's going to invest $100,000 with you just on a lark, right? They want to know, they want to feel comfortable that you know what the heck you're doing. So a couple of ideas. That's one idea. Highly recommended. You need the coaching, you need the training. Another one is this. If you don't have a lot of cash, then partner up with somebody who's actively doing what you want to do and put in some sweat equity. Get some experience. Even if they only give you 2% of the deal or 5% of the deal or whatever it is, if you've got some sweat equity in that, you can use that as a case study. Hey, I've been in this deal. Here's how it worked. Here's how the numbers work. Would you like to do something similar with me?
I love it. Love it. Dave, we got to take a quick break. We'll come back. We're learning from Dave Dubeau on how we can attract money for real estate deals. Don't go anywhere. We'll be right back.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Hey, it's Rav. Welcome back to Everyday Investor. Learning tons from my friend Dave Dubeau on how we can attract money for our deals. Let's go, before we get back to Dave, let's talk to our mortgage expert, Kyle Ford. Over to you, Kyle.
Thanks, Rav. This week I want to talk about financing in the pandemic. Many people, income was affected in 2020, and as their upcoming renewals are up and coming, or they're considering refi, they're worried that the lender is going to take into fact their 2020 income. The lender will absolutely be looking at your 2020 income, and it may very well have an impact on your application. However, many lenders have opened up their guidelines to look at things like the 3-year average as opposed to the 2-year average, how your 2021 year-to-date is trending, if you're back towards your typical pre-COVID income. How's your industry affected? Different lenders have different criteria and guidelines depending on your industry, self-employed, credit scores. So making sure you're not missing payments is more important than ever. And then working with a broker that has access to multiple lenders who have different appetites for different types of files. Please don't hesitate to reach out to myself, team, or your trusted mortgage broker to have a look at your current situation and make sure you're set up best going forward with whatever the world has in store for us. Thanks so much, and back to you, Rav.
Thanks, Kyle. Appreciate your wisdom. Dave, learning lots from you. So basically, I heard you say, get the first deal done, and then, create your target group, reconnect with them, maybe 150 to 200 people, 3 kind of ABCs there. Send the email, let them know what you're up to, a video format next, and then talk real estate even in the third one. If you you don't have the funds to do the first deal, learn, take courses, but jump on someone else's deal just for sweat equity and maybe take a few percentage of that. You have a 5-step, system in how to do this. We've only covered number 1. I don't know if we're going to be able to cover all 5, Dave. So
Probably
if
not.
we don't get to all 5, how do we, I know you have a book, I know you have some courses and some training. How do people get a hold of you?
Yeah, they can get a free copy of my newest book, Money Partner Formula, where we go much more in depth all about this. They can just get that at investorattractionbook.com. I've spared no time or expense putting the sign together for you, Rav. So there you go. Investorattractionbook.com. Trade me your name, your email address. I'll give you my book.
Okay, Dave. So what's number 2? So number 1, we need to create our target group. Number 2.
Yeah, create the target group and reconnect with them on a personal level first before we start talking business. Step number 2 is really important, Rob. We need to have a presentation ready to go. So when people put up their hand and say, hey, Rob, I'm interested, tell me more about your deals, we know what to do. Okay, now here's my take on a presentation. I think most real estate deals are a little bit too complex to just kind of wing it and try and have a Sharpie and a legal pad and go for it MLM style. I don't think that's a good idea. I think what works much better is having a well-organized, well-put-together slideshow presentation. You just whip open your laptop, jump on Zoom with somebody, whatever it is, and you walk them through the presentation. Because what we need to remember, Rob, is You and I and most of your viewers are what I lovingly and affectionately called real estate weirdos. We are. I mean, who else is going to be watching this kind of a show, right? They're into financial freedom, they're into real estate, all that kind of good stuff. The vast majority of people are not. 95% of the population has never purchased a revenue property in their lives. Their own house does not count. So if you even got one deal under your belt, you're ahead of 95% of the rest of the population. But we got to keep in mind that they don't know anything about real estate. So we need to walk them through the process, what we're up to, and a very simple Reader's Digest level, average 13-year-old can get it kind of level. Walk them through it like that, show them the pros, show them the rewards, show them the risks as well. Very, very important. Don't lead anybody into anything with their eyes closed, right? And then walk them through the whole presentation. And then my goal at the end of the presentation, Rob, is not for them to necessarily cut me a check for $100,000 immediately, but to get the ball rolling. So that could be an expression of interest. Some people call it a letter of intent. And then whatever the next part of your process is going to be looking like, introduce them to your mortgage broker, whatever, right? But get the ball rolling. And then the whole goal is let's get a group of these people who've put up their hand and say, hey, Rob, I'm in. When you've got a deal, let me know. Because my whole philosophy, Rob, is when it comes to the money of the deal, the money always comes first. Have your investors lined up. It's kind of like having your team ready to go. You got a hockey team, you got the players waiting on the bench, ready to jump onto the ice and start playing. Same idea with our investor partners. We want to create this group of investors in the wings, ready to go. So step number 2 is have a really good presentation ready to go and get some practice runs under your belt.
Love it. We need a presentation, but I love that you say, simplicity. That's the key. Only 5% of people are doing this. The other 95%, we've got to be able to nurture, educate, go slowly. I agree. I mean, that's why I say the first 4 questions, that personally that I want to know is what's the return on investment, Dave, on this? When do I get that return? Because if you say it's, 20%, but over 5 years, then I'm like, okay, so 4% annualized, so I want to know what the return is and when do I get it? I want to know how much is needed and what is the risk just to start. And I think that's pretty simple. The goal is to have someone, maybe write a letter of intent just to show some interest. And this is what I love here, because you're right. I've heard a lot of people say, you find a good deal, you'll get money. Not necessarily true. Teach people the concept. Teach people the concept, get the money. And then when a deal comes up, we can jump on it, as opposed to your story in the beginning where you had to keep extending. And then, by the way, where are you right now? Where are we? The producers never told me. Where are we speaking to you from?
I'm coming in all the way from beautiful Kamloops, British Columbia.
Wow, it is beautiful out there. Kamloops, British Columbia. I lived in BC for a couple of times, a year at a time. And I'm going to take my 18-year-old. She wants to learn how to surf. So we're planning to go to Tofino.
Nice.
And do a little that if daddy can, if daddy's strong enough to do it. Okay, so create a target group. Number 2, a very simple PowerPoint or whatever it is presentation. What's number 3?
Number 3, this is where the magic really kicks in, my friend. This is all about the marketing, right? We got to get top of mind and we got to stay top of mind with our target group of prospective investors. How we're going to do that? We're going to do that with marketing, what I call constant, consistent communication, right? So you are on a regular basis sending out what I call edutaining information. So a little bit educational and hopefully a little bit entertaining, because we got to remember our target are not real estate weirdos like us. They're normal human beings. They're average people. So we got to keep it light. We got to keep it simple, short and sweet, and on a very regular basis. So ideally get up to the point where once a week they're getting a little drip from you one way or the other. That could be an electronic newsletter, could be a video log, could be a blog post, whatever it is, constant, and then that consistent education, right? So consistent means that we're always talking about the same kind of thing, right? So if you're into the BRRRR strategy, if that's what your main thing is that you're doing, well, that's what you're going to be talking about all the time. You're not going to be talking about, BRRRRs one week, flips the next, self-storage facilities the next. No, you keep it very, very focused on what you want to raise capital for primarily, whatever your main market is. Those sort of
Talk
things.
about that for a second, Dave. Talk about the importance of, if you want to really be successful in real estate, generally speaking, you should be niching. Talk to me a little bit about the wisdom of niching as opposed to going wide. Well, no, I want to do this, I want to do this, I want to do that.
Yeah, huge. So most of us, we take coaching and training, we get a whole fire hose of information. Here's all these 87 different strategies, tactics, methods. Now you got your toolbox, you can do whatever comes your way. Well, sooner or later, you're going to figure out there's one strategy that resonates better with you, that you're better at, that works better for your market, those conditions. Doesn't mean that's all you can do. But when it comes to all this stuff, Rob, that I'm talking about, make sure that you focus, because if you don't, you're seen as a jack of all trades, master of.
That's right. Zero.
Right? Exactly. So specialize, create all of your marketing, your website, your presentation, all your stuff around one thing. And then if you have something different come up, you can present that individually to those investors that you've already got that have put up their hand and said, Rav, I'm in, tell me about your next deal. You can kind of
so yes, we could, Rav, the investor, I could do many things, but if I'm trying to attract money, it's better that I become the expert, not the master of none, but I become the expert on lease to owns, or the BRRRR, the buy, renovate, rent, refinance, all that kind of stuff, or even the flip, or the conversion, or the income suite in a basement of a, that makes a lot of sense. And you're saying weekly, so this takes work, Dave. It's not this is not a, where I can just cut and paste from somebody else and throw it out. I mean, I've got to be thinking about this, but there's a great reward if you do it right.
Well, here's the thing, Rob, and most people don't understand this, is what the lifetime worth of an investor is to them. And when we do this at our workshops, people are blown away, because when we crunch the numbers, quite often one investor can be worth anywhere between $300,000 and $1 million to you, depending on your strategy and what kind of deals you're doing. So when you understand that even just one investor might be worth 300 grand, all of this stuff completely makes sense.
And Dave, I know you're an investor yourself. What are you conservatively, in the deals that you do, what are you seeing annualized returns of? Are you seeing the 25, 30, like where are you at in terms of your portfolio annualized?
Yeah, that would be the kind of look. And again, these days, Rob, I realized a while ago, I suck as the active partner. So I'm a passive partner on people's deals these days. So that's kind of what I'm looking at. By the time everything comes together, we're looking at the, ideally around the 25% mark, if not a bit more, and ideally getting our money out in 3 to 5 years and then having an infinite return after that. That's wave the magic wand. That's what I'm looking for.
Yeah, 30%, or even if it was 25%, you're getting 12 to 15%, not using your own money, or you, Dave, just by writing a check. I mean, both are really good. Dave, time is up here. I appreciate you coming on the show, and I want people who want to learn more to be able to get that free book from you, so that they can learn how to attract money. 30 seconds, give me your final thoughts.
Final thoughts, Rav. Sometimes when you're raising money, you actually have to lower the returns so that it's believable for the average person. Because one of the big mistakes I see people make is they put their best deal ever as a case study, as an example. Big mistake. Put your average deal down there so that the numbers are realistic for an average person, right? A lot more attractive than the normal 3 to 4% they might be getting with their mutual funds, but not so high they're going to go, that can't be true.
Love it. Tell them it's 18%. We'll split it 9-9. Still phenomenal return on our money.
And then do better than that, and you'll be a hero.
Love it. Dave, thanks so much for doing this. Really appreciate you coming on the show.
Rob, thank you. Keep rocking it, brother.
And thank you guys for watching. Without you, we would not have a show. Make sure you tune in next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.